everyone, welcome to today's live session. I'm Alan, your boy, and today we are diving into one of the most critical concepts in future trading, okay? The break of structure, or BOS in chat, okay? So before we start, hit that like button, subscribe, and check the description link to sign up and participate in KuCoin streamer campaign for reward, okay? All right, let me drop the link again for some of you. Jim guys. Welcome everyone. So guys, that is the link in the comment section, okay? So what we are going to do right now, we are going to use KuCoin Futures trading app to do our analysis, right? So but before I move into that, I would love to kindly talk about our previous class. And in our previous class, I could recall we covered the bearish Arami pattern, and we learn how to identify key reversal signals. So the key points we did, I guess we did a quick chart example from the last session, how to confirm the pattern signals with support and resistance and volume. So real trade examples, result and lessons, importance of waiting for confirmation before entering a trade. Okay, now let me show you that already in the chart, how the bearish Arami candlestick pattern looks like. So welcome Daniel Johnny, that's nice. All right, I did some examples of the bearish Arami. I think I said it contains of three candles at the top of the uptrend, which signifies a bearish, right? Which signifies a bearish reversal. Okay. Let me sign in. Let me log in, right? So that you guys can flow with me. Okay. I've logged in. All right, you tap your futures trade, because that's what I'm gonna do today. You select the chart. Wow. Let's check out BTC. I want to show you what we did exactly in our previous class. All right. Remember I said the contents of 3 candlestick pattern. Right? At the top of the uptrend. Alright. Right. Here's an example of it. Must first of all indicate. Let's go to 4 hours time frame. All right. This was an example of the bearish Aramic candlestick pattern, okay? This was an example of a bearish Aramic candlestick pattern. This is it. Right? This was an example of the bearish Aramic candlestick pattern, guys. So now, guess what happened in this chart? The market was moving in an uptrend direction, right? The market was moving in an uptrend direction. But all of a sudden, remember the market pumped from $98,000 to $123,000. That was a massive profit in BTC. Okay, and this trade took place on the 14th of July 2025 this year. Okay, so this was how it goes. This was how it goes, giving us a bearish reversal candle. Now look at what happened in the market after that. The market had to turn down to 111,893. So that would have been a massive profit. That would have been a massive profit. And if you have all this trade to 9 October, 9th October, you would have made a massive profit from it. So alright guys, that's just a recap of a previous class. That's definitely not what we are trying to get today. So what we are going to try to do today, I have already explained to you guys, is what we call break of structure. Okay, break of structure. So before we kindly move into the chart, let me quickly explain the theoretical aspect of BOS, which is called break of what? Structure. Okay, so this is the BTC chart already. So let me just give you guys a small inside definition of break of structure. Okay, so now what is break of structure? A break of structure happens when the market breaks a previous swing high or a previous swing low, signaling a potential trend change or continuation, right? That is a break of structure. Okay, it happens when the market breaks a previous swing high or swing low, signaling a potential trend change or continuation, fam. So right, let me quickly show you. We're going to go through a numerous chart today, and I'm going to explain that to you, what that means. Okay, going to explain that to you, show you what it means in the chart. And I'm gonna explain what it means by how do you call it, swing high and swing low for you too, so that you follow up. Okay, swing high and swing low so that you follow up. Now a swing high in that definition means contents of a 3 candle. Okay, and that 3 candle at the top of a higher high on higher low, the middle candle is longer than your middle candle is longer than the first candle, is bigger than the first candle and the third candle. Okay, that's what we mean by swing low and swing high. Okay, now in this market now, we can all say that the market is in upward direction, right? How should I even what? Just wait for me. Let me get a nice. Now, this market now. Have you guys seen it? This market now. Get a look at it. Have you seen it? This market was in an uptrend direction. I hope you can see it well. That market was in an uptrend direction. First of all, you look at the direction it goes, and if you remember the definition, I said when it breaks a swing high or a swing low. Okay, once it breaks a swing high or it breaks a swing low. So in this chart, because this is BTC, this BTC chart, okay, this is BTC chart. This is BTC chart. This is the BTC chart. Okay, and in this BTC chart, we have what we call is what we call the higher low. Let this pass. Is what we call a valid higher high. Right? Is what we call have you seen any place that you see the red candle, the red rectangle? Know that is your higher low. And any place you see the green rectangle, know that is your position of the higher high. All right, I hope you are communicating. I hope you are following with me, right? So that is it. So that's the higher low, higher high. We have another higher high here. Have you seen it? That's another higher high. All right. This is, we are trying to indicate another higher low. So this is definitely how the market moves. Okay, this is definitely how the market moves. Right. So I'm trying to indicate series of higher highs and higher lows. Okay, higher highs and higher lows. Then if you should see this place now, this candle here, coming, just give me a minute, coming, something I want to check. Something I want to check. This is the higher high. This first red one is the higher low. The green one is the higher high. The second one is the higher low. Right? The last one again is the higher high, higher low. Have you seen it? So instead of me to draw this thing up and up, you can do it by yourself. Okay, you can do it by yourself. So there's no two ways behind it. I just want to make a little illustration for you so that you understand where exactly we are going. Okay, so this is the break of structure. Have you seen it? This is the break of structure. Now what happened here? This is higher high and this is higher low. We can shift this to here, to here, and you can do this on your own. Are you using another one? Are you using it? Are you using another one? Are you using what I'm doing? There's another one here. We can try it again. We can try this again. This is higher high. This one is red. Higher high, higher low, higher high, higher low, higher high, higher high. Again. You see? So this is an example of it. Right? This line, sorry, this box here, break of structure just took place here. Right? That is the valid break of structure. Okay? This is a valid break of structure. So that is just it. That is just it. It's very, very simple and easy to understand. Okay? When the market when it breaks the previous higher high or breaks the previous lower low. That is what we call the break of structure. So the rectangle here that is being colored in purple color, that is what have you seen it, how thick it is. So this is it. That's a break of structure. I'm going to show you a lot of break of structure in different charts so that you understand what I mean by break of structure. In case we move into the live trading, you know where liquidity take place, okay? It normally occurs one, or you can say break of structure is where it breaks where the liquidity is. The previous liquidity and the current liquidity or the present liquidity, okay? That is how it is. That's how it is. So the break of structure it is very very necessary. It is very very necessary. Okay, break of structure is very very necessary when it comes to trading. Okay, you need it to analyze the market. You need it to know where the market is trending at. All right, so that it can give you a clear direction of the current status of the market. Okay, so they can give you a current status of the market. That is how it is. That is how it is. So this is it. I'm going to show you another one that was in our uptrend. Can I move to 2 hours time frame so that I can explain things more? This is it. Okay, this is it. We can take it here. Ayalo, ayay. I'm coming. Ayalo again. Don't worry, I'm gonna make you guys see it boldly. Lower high. Right, in a downtrend it is called lower high, lower low, and in an uptrend it is called higher high, higher low. In an uptrend it is called higher high, higher low. Okay, it is called higher high, higher low. Someone Johnny, you're welcome. This is how you draw it. You have to break it, so you turn it to here. So you have another one that spike from here to here. Have you seen it? Since there was no other higher low that breaks it, so we have another one that was here. You see how the market moves. It mustn't break this one. That is how the market goes. All right, I've exited the rest. I've exited the number of 20. So let me clean some stuff so that you guys can really understand what I mean. So break of structure, it's really important in crypto trading where you are trading futures in KuCoin. That is another one. Come here, see the market. It's a funny market. See, it forms here. This is a form of a downtrend. You can indicate the swing high and the swing low. This is an example of a swing high and a swing low. And I told you that when it comes to a swing high and a swing low, just check it out. Have you seen it? The red candle is 163. It's bigger than the left doji and the right bullish candlestick that is formed there. Okay, so that is it. That is how to indicate break of structure. Okay, that is how you can indicate break of structure in a downtrend direction. But this doesn't really make sense. Let me look for another entry for you guys so that I can make sure I do it well for you. Ayalo. These are the market is. All right, I've gotten it. This is higher low. This is lower low. This is higher low. This is lower low. This is another higher low. This is another lower low, right? That's how the market keeps going. Market downtrend does not mean it's gonna be low. No, sir. I'm gonna have some highs. I'm gonna have some reds. I'm gonna have some greens, just like that. Okay. You can come to this other side. You can say this is our higher low. This is our lower low. Okay. This is our higher low and this is our higher high. You can see this is our lower low, and we can say this is our another higher high which breaks it. Have you seen it? This one breaks it, right? So now where's our another lower low? Wow, this is our another lower low. And well, guess what? It broke the previous higher high. It broke the previous higher high, and the market came down again. These are small inducement. Okay, the market came up again. Where is another valid higher high and higher lows? From here, you can take it here. See, this is really amazing. Lower low. Have you seen it? This is another. It broke it. Our high. Have you seen? Because these are valid. Okay, and if you should see all of this, you should know that the swing, the candle in the middle is bigger than the candle at the left and at the right. That is the swing low. And over here also, we have the swing high. The same thing that happened. We have the swing high. And if you can see this, you can say, this is what I mean. This is the candle. This is the candle. Right? The green candle here. This green candle I'm talking about here. The green candle I'm talking about here. It's the green candle definitely. The green candle definitely. The wick, whether the wick or the shadow, it must be bigger than or the body. If it is bigger than, or if the exact point, okay, where that candle is located is being larger than the rest, that is your swing high and your swing low, the middle candle. So that's the middle candle, and you can see the doji here by the left is bigger than that. The doji here at the right is still bigger than that, right? So that is the valid swing low. And if you should come to here again, and this is also our valid swing low. Have you seen it? This is our valid swing low. This can't be our valid swing high because it hasn't yet displaced the first swing high. That's why I didn't pick it as a valid swing high. But here, if you should check this out, this was a valid swing high because the bullish green candle here, the shooting star hammer candlestick here, the shooting star candlestick here displaces the doji at the left and the hammer 8 on the right. Sorry, the doji on the right and the hammer 8 on the left. That is why this place is valid. Okay, I believe you are following. Okay, so this candlestick is very interesting, and and good to go with, and you good to go. Right? This is another valid lower low. You see, this one displaces the former lower low, right? That's how it goes over and over and again. And if you have a lot of numerous charts, where you can have it. You have thousands of coins here in futures trading in KuCoin. If you haven't downloaded it, I will advise you to go ahead and check it out. Okay, so that is the amazing thing about this candlestick pattern. It's very amazing and interesting. Okay, you have another one. You have another one. That is for the uptrend. I'll just show you guys so that you understand what I mean. Let me do that for you again in the downtrend. Let me do that again one more time. In a downtrend, this is it. We have the higher high. Sorry, in a downtrend, it is no more higher high. It is higher low and lower low. Okay, so this is our lower low. Have you seen it? Down to our lower low, and our lower low pick that to our higher high, to our higher low. Then our higher low took out the next one. I believe you can all see what I'm doing. This is what I'm doing, and that's what I'm doing. Let me increase the brightness for you guys to see. All right. All right. Just stay with me. This is our another lower low. Putting it to our higher high. Have you seen it? There is another one, higher low. Did that pick our point? It's not our higher low. It didn't take it out. So that higher low is not a valid higher low. That's what I mean. Okay. So we go down to it. Another one here. Have you seen it? This is another one. All right. We've seen it. So that's just the way it goes. Okay, that's how the way it goes. So if we want to discuss the break of structure over here and over here, over here, over here, over here, over here, where did it go? Where did it go? Did I delete it? Did I delete it? Maybe, for example, you want to take something from here, right? Trying to show you break of structure. Right, this is it. So now this point where the market breaks this higher high is what I refer to as, that is, if you can check it here, if you can check it well here, the purple candlestick, the purple line there is what we call, the purple line there is what we call the break of structure, because you can see kindly from here that the top of this was 97,650 US dollars per one BTC at this point. That was the highest high, but the market traced down and gain liquidity, because the market need money. Liquidity is money. You need money to push the market higher in order to give you another break of structure. As I said, it must break the previous higher high. So it broke the previous higher high to where? Check it out, to 104,303. So there was a genuine break of structure. How was it genuine break of structure? If you should check this three candle here, the shooting star candlestick over here, right? The shooting star, what happened to the shooting star? The shooting star was bigger than the bullish candlestick at the left, and also at the same time bigger than the hammer head at the bottom, at the right. Okay, so that gives you a valid swing high. Okay, if you don't have a valid swing high, it is very hard and difficult for you to indicate that, oh, there's a break of structure that occurs here. That doesn't work that way. So you must make sure that you have a valid swing high. Okay, you have a valid swing high. That's the way you can increase it. Okay, so that is just it, farms. That is just, we have numerous example of it. We have a lot of it. Okay, we have a lot of it. So I'll be very, very grateful if you can take your time, search, analyze most tokens, trading on futures, trading live, do some revision of yourself. I've taught you a lot of various candlestick pattern. You can implement it, combine it with break of structure for you to have and execute a trade. Okay, okay, that is just it. Swing low, swing high, swing low. Have you seen it? Have you seen another one? It is a very mad example. Have you seen it? That swing low. Guess what the market did? Have you seen it? It kicked the previous one. Have you seen it? This is another one. He has to take out the previous one, and we have to take it in a swing high place. That is it. Okay, that is it. So you use, for you to have the time frame in which you will definitely get access to it is the 1 hour time frame upward, from 60 minutes, 2 hours time frame, 4 hours. That is where you'll be able to indicate where the swings, highs and lows are really taking place. All right, that's where you indicate where the swing highs and low are really taking place. That's just it. So the step-by-step example is that when you open the chart, you use the 1 hour time frame, you identify the swing highs and low, you wait for price to break the structure, confirm using the trend line. These are confirm using the trend line, support and resistance. These are also the price action strategy in which you can use to enter your trade. Okay, once you get that, you enter the trade in the direction of the break of structure, right? So if we, for example, wanted to enter this trade now, we will wait for the price to kick out here. Once it kick out, we take a short, wait for it to retest. It takes another one. You are still following. Coming. This is not an example I'm supposed to use. All right, where is it? Now, this is it. If you waited for the price to come down, it comes, it took this other one, the price come down to where 965,000. Immediately the price took the previous one. That is when you would have sell this market because of this long engulfing candle. So you don't just assume it with only one strategy. You add with certain strategies such as the trend line and other points. That's where you'll be able to have a nice trade. So imagine taking a short position from here after this bullish engulfing candle was formed. You see, and you take your stop loss to be slightly above the previous high. just slightly. This is approximately 1:4. 1:4, right? This is approximately 1:4 candlestick. This way 1:4 reward risk to reward ratio. Okay, so that is it. The candlestick pattern is the break of structure, which is the BOS, is very very necessary in crypto trading, and it is gonna help you a lot, help you a lot during your trading. And if you can combine it with other as you combine it with other trading futures, okay, this will enable you. So imagine taking a short position from here, maybe selling BTC at 7,321 and taking your profit at 64,960, and your entry is way 69,201, 69,000, 64,000, and way 70,000. Let's take a trade about that, okay? Just a limit so that you know how to do this, okay? So that you know how to do this. This is what you do, because right now the market is in consolidation. You don't have to trade there. This is it. Come here, you take a sell position. Remember I said limit. You take profit at 60,000, right? Stop loss was 70,000, right? Have you seen the profit that you would have made? This would have been a massive profit for you. And if you have the leverage was too much, you use 10x. Confirm. That is your leverage. That is your leverage, and the price is 69,000, right? The quantity of USDT, let's say we enter here with $100 liquidity, and we take profit. We take profit at 60,000, and we set our stop loss 70,000. Have you seen? This would have been a massive. This would have been a massive profit for you. 117% in under many minutes. So you see, this trading is very very nice, and and it's very nice and simple to understand if you should follow what I'm doing here, and don't just come here for live classes. You also take your time to do your own practice. You will definitely, you will definitely excel in whatsoever you do. You will definitely excel in whatsoever you do. So that is just it, and I'll be very happy, and I'll be very very happy if you focus and learn in whatsoever you are doing. It really really helps, okay? it really helps. So alright guys, we're gonna stop there for today. Thank you for your time. Thank you very much for your time, and put to work. I'll be very happy to see you guys learn more and more. Okay, I'll be very happy to see you guys learn more and more. So that's just all we got. Thank you very much for your time, and have a nice day. We will continue from there, farms.